Stephanie, you're beefing up your exposure to natural gas with Southwest Energy. Is this just a play on the recovery we're seeing in natural gas prices?
It's a seasonal trade for certain. That's part of it. So we are seeing a little bit better demand. But we also saw such a dramatic decline in the rig count year to date. It's down about 46%. And so you have less activity trying to find it, and you have a little bit more demand because of the weather. And also, industrial companies are big users, and utilities are big users of natural gas, and they continue to see a slow recovery as well. So I think all of these factors are reasons we want to be involved in the names. We thought that Southwest Energy, just as a pure play, one of the highest quality companies, but we will also get exposure from natural gas through Devon and through Energy Transfer Partners, as well as Chevron, just to a lesser degree.
Okay, now we've been seeing a shift away from oil and, away from natural gas and into oil for some time. Do you think we're finally getting to the end of those, like the ninth inning or something?
Yeah,
like that?
I mean, I do. I mean, I think that we've been selling some of the oil-related names because they've had a nice run, and I wouldn't be surprised to see oil in the trading range, 80 to 90 or so. And I think a lot of that is the function of supply. There's a lot of it, right? And now you have the Saudis also starting to pump in more supply. I think the reason that oil prices are where they are, a lot of it is the political tensions in the Middle East. And so I think you're in a range of 80 to 90. I think at the same time, nat gas can continue to creep higher. I don't see $5. Morgan Stanley was pretty aggressive last week with that forecast for nat gas. But I certainly think that the current levels, maybe a little bit higher, and this is all what the companies really need to be able to produce profitably.
And then Southwest Energy, it's run 40%. It's up that much since its bottom in June. How much further can it go?
And it's also significantly down from where it was from its high, right, of 44. So I think that if you look at any of the metrics, one of them that we like to use is EV to EBITDA. The stock is still trading at a significant discount to its historical average. And I always like to look at the averages, obviously, to give you some perspective. But I think this company is poised to at least see solid returns in this quarter. But then going forward, I think their guidance might be actually a little bit better than expected. And so I think we think it goes higher.
All right, great. Thank you.